and to give us his view, Peter McGuire joins us from XM. Peter, good morning. I hope we've got you there, and I hope you're having a good one so far. Take us through what really stood out to you from the US session.
Well, good morning, Nadine. Hello, David. Yeah, good news all round, Nadine. If you look, I thought the Russell 2000 was the headline that really gave everyone a feel-good moment, 3.19% boost up. So it was down 30%, as we know, over the last couple of months. Really sold off dramatically, and it's turned a little bit of a corner. So the US consumer hasn't gone away. They're feeling fairly upbeat, and that was demonstrated, as David mentioned, with those better than expected numbers. So yeah, the overall theme is not too bad for a midweek. Happy Wednesday.
Absolutely. Pete, I know you focused on the price action a lot, but sense your gut feeling at the moment, dead cat bounce, or is this maybe the start of a bigger move?
David, I tell you what, I mean, everything was sold off so dramatically over the last couple of weeks. So maybe it is a dead cat bounce. It's, it's easy to look back in hindsight in a week's time and look back on what I say today. So, all I'll say is this, that traders are rubbing their hands with glee. What we've seen over the last 24 to 48 hours, it's been solid. There's been plenty of movement, and that hasn't disappointed from currencies naturally across the crypto range. And certainly with those equities bouncing higher, I'm expecting a good day today as far as Asia Pacific. And keep your hands on the wheel, because there could be some good dollars to be made.
Yeah, right. Okay, so that's getting traders excited. We're also watching the commodities complex very closely. And I do note that as we speak, Brent crude futures have risen more than $1 to 113.34. That's coming off the first session overnight that they fell in 5. So what are the main drivers for you of the oil market right now? Because we still are talking about demand destruction, of course, coming out of China in particular.
Sure, Nadine. Well, look, I think that they were oversold, and when you saw them back down to 100, that triple-digit number, everyone thought that there could be a further consolidation to the downside. It's really just demonstrated that the overall message that we're hearing is that traders are bidding it up, and here we are nearly at that 113, 114, 115. So the momentum's there, don't stand in the way of a bull market. And the old story is it's range bound, it's going to be 100 to 120, and it's choppy. And now's the time to really, enjoy those big breakouts. You see 3 and 4 and 5% moves over a session. And if you get the timing right, Nadine, it's just outstanding. So, the fundamentals are important, but certainly from a technical standpoint. And remember, you've got seasonality demand, and you've got summer driving season kicking off in the US. Everyone's in their cars, V8s. I know you're paying a lot for gas, but they'll be crisscrossing that nation like there's no tomorrow.
Speaking of 100 to 120, the US dollar index is trading above 100 at the moment. It's had a massive rally, in part because the euro's been pretty weak. It's showing a bit of signs of fatigue though now. What do you make of the recent price action?
Well, David, look, we put our mind back to 20 years ago, September 11, you had a 105 to 110 handle. It went even a little bit higher, I think, to 115. So it's an unusual event that really drives it higher. Well, we've seen it now back at 104.50, nearly 105. We're sitting at 103.30 at the moment. So it was exhausted to the upside. It gives up a little bit of those gains. We've seen a lot of those currencies bounce. Aussie's bounced. Have a look what the yen's done, and also with the euro and the pound. So traders are again sold dollar, bought the other currencies, and it's just been an incredible 36 hours. I know I'm harking on that, but that's really what traders are after. They just want movement, David, and that's what's been demonstrated to us.
Now, we've had a lot of commentary coming from Fed speakers, and I will just say in the past 15 minutes or so, we've heard from Evans. Now, Evans is, again, talking about the Fed's commitment to getting inflation back within its band. He's saying that over 2023, he's optimistic inflation will be 3% or lower, also flagging that the short-term neutral rate may be higher than the long-run rate, thinking that front-loading is pretty much in process. So this is a very hawkish Fed, but this time, a very comfortably hawkish Fed. They really have been backed into a corner. This soft landing, the mythical soft landing, what's the view there? Do you think that this could be achieved given the fact that we've got, European economic data looking pretty strong as well, and likely Chinese stimulus to come?
Well, Nadine, if you look at a global view, yeah, maybe that's right. And you get two 50-point hikes, one in June and one in July, and then they sit on their hands for maybe a couple of months. The inflation story globally is one that's far more troubling than possibly, that good news story that we've just listened to. If you listen to the likes of Estonia at 19%, you listen to Netherlands at 11%, and a host of other nations in that bandwidth between, 10 and 20%. So it's going to be a hard one. It's not going to be easy to rein it in, and we all understand the impacts as far as stagflation and recessionary fears leading into third or fourth quarter. So, yeah, I don't think the sunshine is there encapsulating everyone at the moment. I think it's going to be some gloom ahead, and just hold on to your hats because it could be a bit of a bumpy ride ahead.
That'll be pretty influential on the Aussie dollar. In the near term, though, Pete, we've got some big data releases coming out over the next 24 hours or so. Wage price index today, is that going to be a risk event for the Aussie?
I think it might be a little bit, David, but overall, I think that the Aussies had a nice little uptick. I've made some good notes on it, and CPI, where we're sitting at the moment, where we're looking as far as the overall impact with wage growth over that first quarter and what we're expecting. So I'm not looking for surprises. I feel as though that it could be, and with China, a better than expected situation out of there, it could be a nice time for the Aussie to shine again. Remember, since April, we were at 76.5. We went down to 68.3, and now we're bouncing to the upside again. So I don't want an 8-cent move being a trader. I'm happy to take 5 cents out of 8 cents. But I tell you what, if you do that, you'll be sitting on a banana chair drinking daiquiris all day long at Coogee.
I would love to be doing that, Peter, I've got to say, and it's the weather for it outside today as well. As a trader, does the upcoming Australian election change anything, mean anything? Is there a way to trade it?
Well, Nadine, yeah, it certainly does mean a lot, and everyone's sitting on their hands. Don't be surprised for a surprise, is what I'm hearing. So there's the first part. The second part is the wage numbers, what's happening as far as the overall inflation themes. Let's see what happens over the next couple of days as far as global equities. So, yeah, the overall situation in Australia is relatively good. We understand where unemployment is. It's really nearly record lows. So I think it's an overall good theme. Everyone that wants a job can get a job. Maybe not everyone that wants a pay rise can get a pay rise. That's a different matter altogether. So the situation is, roll forward. Let's see what happens over the next month or two. And I don't think it's going to be a bad place to be, good old Australia.
Pete, just to go and finish off from my perspective, I want to go and ask you about liquidity in the market because, of course, volatility has been pretty elevated recently. What are you seeing when it comes to the various markets at the moment? How are liquidity conditions here? Because we know that when they start to dry up, things get pretty gnarly.
Well, David, if you're looking, as far as currencies are concerned, you've got no problems there as far as huge liquidity pools. So big markets, 24 hours a day. If you're looking at domestic markets and, boutique stocks, that could be a different situation altogether as far as from a liquidity standpoint. So, yeah, be conscious of what you trade, how you trade it, and when you trade it, and where you trade it. They're the more or less the capstones that you've got to be conscious of. I don't have a problem, trading energy stocks. I don't have a problem with energy itself. They're big pools. Those futures markets are deep. So, yeah, everyone's happy. I think as long as you can sell when you want to sell, David, don't get squeezed.